Okay, so here's a crazy trade that happened on Euro USD Friday morning. This I did not take this. I'm not going to sit here and say I did it. I was still asleep. I'm not getting up at 3 in the morning. Um, but you guys can see, right? You guys can see. Let's look at our structure, right? Structure was a little weird, honestly, but can see right here. So now this was a structural point for me. And I know that we talked, or, in some of the courses, we talk about getting that 50% retracement to constitute a pullback. I personally don't really do that because if I'm going off of the definition of what structure is, this is a pullback here, clearly, because we made a new low relative to this, right? We trade below it. So in a downtrend, structure for me is obviously lower highs and lower lows. And we get the lower low once we break the previous low. So let's imagine, here, I'll do replay mode so you guys can see. So, right, let's say you see, we'll start it like right here. So if you're eyeing this, you can see like, okay, and this will probably help you guys. So high, low, high, this made a new low. So I'll delete this because it technically hasn't happened yet. I'll play price out. So I'm like, okay, I expect some type of pullback right up into this leg to push us down. And this is the last buy to sell candle, barely missed it. Let's see where the 78.6 lined up. So this is a leg to the downside. So if you want, you literally could have pulled a 78.6, or you could have pulled your fib and looked at the 78.6. So this is 78.6 as well. But this is a confirmed lower high once we break this low. Okay, so we broke this low, right? So, yeah.
Что? Плач минutes не битвуда.
Do what? Okay, so this is a new low after we break here, right? So we break below this. This is a new low. So if I'm watching price play out, I'll mark it up here. Okay, so now it pushed lower. So now this is the low. Like this, it's confirmed that we have made a new leg to the downside. So once you break past here, you can definitely say this is the high that produced the low, but then you wait for price to play out, right? To see where it actually reverses and kind of starts heading up. So like this low here, right? We had a lower high, lower low. Now this wick traded above here. But what do I always say? I want to see body closures. This isn't a body closure. I want to see body closures above the wicks for structure. So like this was the structural point here, right here. Oops, wrong thing. So here is the structural wick here. I'd want to see a body close above that. We didn't get that. We just got a wick above, which tells us that that was just a run on liquidity. So now this is, right, the new low, and I'll get rid of this because we haven't seen it play out yet, right? So here's the new low. You could also say this, because this is technically a pullback as well. There are a couple different ways to look at it, but for me, just going off of the definition of structure and how I use it, this, we broke below, pulled back, had a retracement, a lower low, right? So this could be considered a BOS right here, because again, high that produced a low, high, new low. Here's a pullback. Here's a new low because this new low, this low broke past the previous one. So this could be viewed as a BOS right here. Now let's see if we trade it into anything. So I'm going to put a pair or a horizontal line and go back. Let's see. I might have to go to a higher time frame. Yeah, I'm going to have to go to a higher time frame. So let's see what this traded into. Oh, look at that. What did it trade into? Let's see if we can get a better candle. 45-minute right here. Here's the open of the sell to buy, right? Inefficiency fell as well. So that's what we traded into. And then we broke structure here. So let's see. could you have gotten an opportunity at the 78.6? This is a single leg to the upside because this is the BOS, right? And again, focus on the definition of structure, right? Here's, and I'll even go a little farther back. High, low, high, low, high, low, high. The new low is not this one here, because here's the wick. We never body closed below it. This is the body closure. Here's a pullback and then a new low. So this is the last structural point. Now we break above it. So we break above the last lower high in a downtrend. So now we're confirmed bullish, right? We should be looking for buys. Okay. Now I pull a fib on the single leg to the upside. This isn't like this, like, don't look at it like this. This isn't right. It's not leg, pullback leg. That's not how you should think of that. This is all one leg to the upside. So let's see. And then we can just do a negative 27 because that's what I talked about in my one video. Okay. Here's your negative 27. Let's see if this activates. I have no idea if it does or not. Okay. So that traded below. This was New York session. And this was back on the 16th. But I actually think I was looking at this real time. But you can see, so if price plays out, this will take us to the one trade I was trying to show you guys. So you can see, let me keep going. So it broke through this level, right? And now you could look at this, and obviously this is hindsight, but this looked like a BOS to me right here. This was a break of structure in my opinion. Okay. So you can see if you adjust your structure, what did this end up being? This ended up being a really deep pullback here, right? This ended up being a deep pullback into here. Let's clean some of this up. So high, low, right? Let me get rid of this one. And then low, high, low here. And then here's our new low. And then we trade above it here. And I have to go do something real quick. Give me just a minute. I'll check the chat when I get back as well. So drop questions. I'm going to give you guys like a minute to ask something. To ask anything you want. Okay, sorry about that. Okay. Are you talking about white coffee? I'm talking about supply and demand. Yeah, the 1 minute's kind of hard. And like, you can see this here. So like, if you were focusing on all this, this is confusing, but if you zoom out, like literally when I look at 1 minute structure or look at the 1 minute, I zoom out to look at the higher time frame leg. So like here, like with what you said, right? Like this could have fit. I mean, it faked me out. This is structure within here, but this is just one ginormous leg. In hindsight, you can see that, but honestly, I still would have looked at it how I explained it to you guys before. That's just how I perceive price or kind of analyze price. But yeah, like 1 minute structure can be hard, but you can see this was just a complex drive because it had all these little legs. This is like this isn't a complex drive to the downside. It's just like a straight line. This was complex because it had a lot of order flow. But we pull back, we don't close above. and then we make the lower low here, right? So, and I think I got a little mixed up, but this is what I was talking about, like with breaks of structure. Like this didn't technically close above, which is why we can say that this was a confirmed lower high and lower low, even though it wicked above. It's just a run on liquidity. But you can see here, here's a new low, here's a pullback, here's a new low, right? So low, pullback, low, pullback. Here, ran out, look at all this liquidity, ran it out, and then mooned and broke structure, right? So now you're bullish, okay? So you can see this is bullish price action. I'll just start marking up the swing points. So we shouldn't trade below this. Look at all the inefficiency too. That's going to be a really, really strong level. You have a ton of inefficient price action down here, and it was a higher low, right? So you can see. So now this is a range, trading range from the low to the high. So if we break below the low, we're bearish. If we break above the high, like with a impulsive move that clearly closes above, right? If we do that and we have a low that produced it, that's going to be a higher low and a higher high. So this is just consolidation kind of within this range, because it's so boom, lower high, lower low, break above the lower high. So this is a pullback, bullish leg, pullback. And if we close above, this will be a bullish leg. Okay, so we have now closed above. Where's the low that produced it? So you can see this was actually really pretty. It didn't trade into anything necessarily, but you can see within this leg to the downside, here are the structural points here, 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 close below here, boom, 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 break above, POI right here, right? Goes up off that level. Why? Because this is a leg, and now we're looking for a retracement, and you get a complicated, ugly looking retracement, but nonetheless a retracement. You break structure, come back, test it, and go. So now this is the higher low, the higher high, right? What you could do, this is your new range, because this is the most recent higher low to the higher high. Pull a fib on this. I don't think it hit the 78.6. I don't remember. We'll see what happens. So it looks like we already got a little bit of a pullback, but this is where the big move happened, right here. So look, what did we do? This here was and you can, this structural point here, technically the structural higher low is the deepest point in this pullback. So it's here. And then this is the new high. Now, what do you see? This is a pullback, right? And then we create a new high. On the smaller time frames, like the seconds. So when you get to I look at higher time frame structure. If you think they're to trade during, you should mark out when you're trading like the 3 or 5 minute during New York, you should mark out like literally every time frame above it. Like mark up the daily POIs, mark up the hourlies, the 4 hours, the 30 minutes, the 15 minutes, like mark all that up, because that'll just give you really good areas to be expecting sensitivity at. Like you should just look at all of them. Don't single a, one time frame out or whatever. Suggestions for people having a day job and living in a place where EU. So for me, that's really hard. I mean, it depends on when you get off work, but you can really trade. You can trade EU through like most of the day, but I would avoid trading it during like the beginning of Asian session, because it's just ugly. That's what this is. This is all like, you can see the Asian price action. It's disgusting. This is Asian, like it doesn't look good. Don't trade during Asian. I would wait. Trade during New York or London, whenever that is for you. or both. It doesn't matter. Just don't trade at the beginning of Asian. You can literally trade it any time other than that. So on the seconds time frame, or like the 30-second or 10-second, doesn't matter. We create a higher high because the body closure was likely up above here. But even if that's not the case, what happened, right? So London starts right here, okay? And what do we have? We're bullish, clearly bullish. This is a pullback, and we create relatively equal highs heading into London. That's just going to be an area of liquidity, right? Now, this trade, if you just sized it up like this, because this is a realistic expectation. The original price I had it at isn't realistic. This is a 1 to 29. Now, why is this the POI that I have? So it's because it's in hindsight, but if you're that advanced and if you're that comfortable waiting and you can manage a retracement all the way down to here with like 2 pipette stop loss, I'll show you why this level worked. You can see on the smaller time frames, structure was like, oops, wrong one. So structure would have been within wicks. Like this, right? Now this, so this is a break of structure all the way down here. And clearly the higher time frame intention is bullish because we created equal highs heading into London. Now this wick, you could have taken a trade within this wick. You definitely could have, but this is so big and just kind of obvious that it's going to function as a point of liquidity. People have moved their stop losses below this. Look at how impulsive of a push this is. The wick on this candle is way bigger than every wick around it. And there's one unmitigated sell to buy candle heading into London. And we have equal highs up here. You could have 78-6'd this move. It wouldn't have been as good of an entry, but it would have got you in with very minimal drawdown. And the other reason I like this POI is because it's within, so this is clearly the higher time frame sell to buy that caused this push up. So it's within the sell to buy. There's a point of liquidity right above it, and it just sticks out because it is a tiny 1 minute doji candle at the bottom or at the origin of the move that mitigated the inefficiency here in this doji and traded into the open of it. So if you can see, or if we let price play out, just creating equal highs, right? It comes all the way back down because from, and this is even better from a structural standpoint, this is still, we don't create a new high until we're all the way up here. Now, where is the structure that created it? Like I said, it's the deepest point in the pullback that does it. This is the pullback. This is the new leg. It's the deepest level that does it, right? And obviously you would have adjusted your TP to not be the equal highs because those don't matter anymore. They got destroyed right here. You could have targeted these equal highs right here because this obviously didn't trade above this wick. So this is just an area of liquidity right here. So you could have targeted that. And again, this is the literal last point of return for this leg to the upside. This is one big leg. This is an area of liquidity. This is an area of liquidity. And on the way down, we had this is liquidity, this is liquidity, this is liquidity. We trade all the way down, spikes into that level. Consolidates before New York, and then look at what happens. What did I say this was? Now, what have I been saying for all the people who watch the videos? It's liquidity because they're equal highs. Heading into New York, you have equal highs. It's just like London. And you can see super impulsive push above because there are a ton of orders here. So ton of orders ran out with this wick. And now I was looking at this level, and then I didn't take it because I never got a break of structure down here. I always wait for a break of structure. But you could have, or maybe kind of foreseen why this didn't end up holding down here, is because this is higher time frame. This is all one leg to the downside, clearly, right? And we caught sells from up here. I can show you that trade too. It's in a YouTube video where I evidently should have gotten stopped out by the spread, even though I don't have the spread. So it is right here. But this is a leg to the downside, this whole thing here. So if you pull a fib on it, I don't even think it traded into the 50%. I don't know what it traded into. We can look at that so we can learn, but I don't think it traded into anything, to be honest. I wanted price to come up into here. This was a really clean area of interest for me. So I was going to try to buy it up into there from down here. So my trade would have looked something like this. This is what would have been ideal for me. POS and then up into here to then go down again because it's a higher time frame POI. That's what I was anticipating, but if I play price out, you guys will be able to see that it just never broke structure. So I did not take it because it continued to melt. It never, like, there was no break of structure in this area. You'll see it. The structure just held. That's literally what I've talked about that. Like, people are going to try to buy it up here when price is just doing this. Like, leg, boom, break, leg, like literally no BOS. So I didn't go long, never broke structure. You got no confirmation. It's that simple. Oh, that sucks that Asian session is the day. Yeah, that's unfortunate. I trade New York and London only. I try not to trade Asian. But anyway, you guys can see this was making nice bullish structure. And this was like the LPOR here because leg pullback. And now this isn't a body close above. This is a body close above. So this is your leg. And I was looking for continuations up. It looks like it traded into this. It's probably the 50%, to be honest. So let's mark off the 50% of this. You guys who have been watching my videos know that I like the 50%. 50% on these works really well. So it's like right there. Barely missed it. So maybe it traded into the open. I don't know. Yeah, it traded into the open a couple times and ended up going down. It could have also just traded into like a 2-minute candle. It didn't trade into this, but this is like, here's a down up move. So it probably traded into this wick right here. I'll get rid of the box and put a line. So that's because this is a leg pullback leg. This is like the literal last buy to sell starting at this wick. That's probably what price came into. Yeah. So I didn't really anticipate that just because it was kind of random, to be honest with you. But you could have perhaps seen it here when you broke below this. And that made this leg down, but this is like all efficient price action. So getting in on this trade honestly wasn't realistic. It's just there was no opportunity, but there was a trade up here that I did take. Can find it. Let's see. I use Wyckoff, but supply and demand is just like an easier version of Wyckoff, to be honest. It's not the same thing by any means, but it has a lot of the same concepts. So let's see. Go to the 30-minute time frame, and if I go to the 30-minute, you guys will be able to see it. So 30-minute, right? Let me get rid of all of this. So 30-minute, let's see our structure. Boom, 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 boom. And this is why I say you don't need, this is a leg. This clearly isn't a 50% into the leg, but it's still structure. And you can see lower low, lower high, lower low, lower high, lower low, lower high, lower low. Okay. So what do? This trades right into these candles here like that, trades into here. Now let's go to the lower time frames and look. So I guess the main focus of this video is I don't really place limits unless it's on the 1 minute. Like on that EU trade I just went over, I didn't place a limit there because I wait for price action on the lower time frames to confirm. It's always smart. But so again, here's our high, low, pull back into this is the origin of the move, clearly. This could be interesting, by the way. I barely missed the 27. So anyway, here's a leg, the origin, the like literal final buy to sell. Since this is a downtrend, the origin is going to be a buy to sell. The final buy to sell within this huge leg down is like right here. You guys can see that. This is a buy up, sell off, inefficiency. Here's a high that's going to function as liquidity coming into it. Right here is a bunch of liquidity here as well. Ton of liquidity. So price trades into the literal last buy to sell within this entire leg to the downside. And what happens? So let's look at the structure on the intermediate time frame. So within this leg, boom, 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 boom. Break above. High, low, high, low, high, low, high, lower low, trades back above. So for me, really, this leg could be looked at as this. So this did not close below here. It just ran it out. So it's high, low, high, low, high, low, high. And then what did we do? So if price is going to maintain, this is the most, heading into this level, this was the most recent higher low that supported the push up. So we should not trade up, we shouldn't trade below this, right? Now, what ends up happening is we don't trade below, don't trade below, don't trade below, don't trade below. Then we trade below right here, right? We do trade, we end up trading below here. So that tells me that the demand in this wick, because this wick has a ton of demand in it, it ran out these lows, created a really nice higher high, but it traded into the origin of the higher time frame move. So this was a catalyst to mitigate orders here. There was demand in here, but the demand broke down when we traded below it. So now what do I see? So this is a leg to the downside, right? Where now we're bearish because the orders have changed. Once we traded below this, we're bearish. This is showing me that there is bearish intent to go lower. Now you could argue that this ran out the low and made a new high. Yes, that's what this could have done too, but that's why I confirm it. You'll see what I mean. So if I had seen this too, I would have said, okay, this demand is invalid. We could short off, right? But that's not what ended up happening. So here, it's same logic. We broke below the demand that created this higher high. So now I'm thinking, okay, we could see some bearish, we could see some sellers come into this market, okay? So this is a leg. Where's the origin? The origin's up here. So I mark off the entire origin of the move. And what do we see? This is the pullback. Here's our higher high. So here's our higher low. And then what do you get? Trade into the origin, break down. Could have placed your entry here. Stops above this wick right here. That's how I would have done it, because I've seen this. Well, and that is how I did it. I've seen this happen so many times. This is the highest point of this leg. So you break down. Now you're bearish. Where's the highest point of this bearish leg? It's not here. It's here. So put your stop above that. And then I only targeted down into here, right? Now my entry wasn't this doji. I said it could have been, but it wasn't. I closed it here. I didn't send it to the members like this because I was targeting the wick because it was the 1 minute candle that actually ran it out, but it still ended up hitting for them too. But my entry was, again, not that 5 minute doji. making it very clear that it wasn't. My entry was right there. Buy up, sell off, stop above this, right? Here's the wick. Put it above the wick. And on my broker, I added half a pip because that's what you should do. Don't let the spread knock you out. But you should also trade with a broker that really didn't have spread. You shouldn't really have spread on EU, to be honest with you. But so I targeted here because what happened here? Using past price, it wicked it out, made a higher high. So here, could it wick it out and it made a higher high? Yeah, it definitely could have. But if I wanted to, this isn't my style of trading either. We're in a higher time frame downtrend. High, low, high. So what would I expect? I'd expect at least into here because I think we should create a lower low. So that would have been a 1 to 16, and it would have taken a couple. I mean, it probably would have taken like a little over a day to hit, but that's what the trade could have looked like. Completely legit. That's like one of our members held it down into somewhere down into here, and he ended up passing a challenge. So CoinX is the broker I use. They're really good. It has 2 X's, COINEXX. So the Wyckoff Wizard V2 is doing really well, by the way. It's been crushing it. So yeah, anyway, this was the trade breakdown I had. I talked about structure. I kind of addressed everything that I wanted to talk about. So I'm going to stop the recording because I covered my trade, and I just talked about structure and a little bit of the 78.6, the 78.6 trick, I guess. But if you guys have questions, you can type it up or type it in the chat, and then I'll answer them. There was actually a 78.6 on GU the other day. I think it was right here. You guys can see, I talk about the structure all the time. High, low, high, low, high, low, high, break below. Here's our leg to the downside coming into New York. Look at that. Right into the 78.6. Here's a high that functions as an area of liquidity. Stop. TP1, TP2. You can see it reacted off the 61.8 and kind of start chopping around. But perfect example. Like you guys can clearly see it. You had a BOS right here. Low or high, low, higher high, low, high, low. Where do we close above? Close above here. High, low, because we close above here. Boom. But then you break down. This is a bearish leg. Pull your fib on it like I did here. So pull the fib. What time does this hit? Right during New York, right? This is where it starts expanding during New York. 78% retracement right into, you can see reacted off the, well, just kind of traded through the 27.2, but then started to consolidate around the 61.8. So yeah. So yeah, I'm going to stop the recording. I hope you guys enjoyed it. If you liked the video, share it. Drop a like, comment too. Like I said, I want to grow the channel, so I'll address the questions I do have. So